You did a Q&A with Wall Street Bets on Reddit. How was that experience? What were your takeaways with interacting with the community?
Yeah, it's fun. I mean, I've done AMAs for years, right? And so it's always fun. You get a couple crazies, but everybody's just so passionate, and that's what I like about it. And I've always been a big believer, and I wrote a blog post 15 years ago about get long and get loud and sell your book, right? And so that's what it's all about. And Wall Street Bets had some really good research early on, like on GameStop in particular. And then it got really, really loud, and everybody piled in. And I think it's a positive, because that's exactly what happens with big brokerages, right? Some analyst comes out and says something, and then they have 20 million customers, right? And they tell the 20 million customers, and before the market's even 2 minutes old, the stock's up $10 because all the customers from that brokerage are making money, or at least buying before it really hits the market. And so, that when small investors can crowd together and get that power, I'm a fan.
Yeah. We've talked about this a little bit, me and JJ, and I've been curious to think of what maybe some of these hedge funds like counter reaction to that movement would be. What are they thinking? Putting yourself in their shoes, Mark, what do you think they could be like viewing that whole situation?
I mean, it's just one more piece of information, right? I mean, anybody who's traded long enough got surprised by, I wouldn't call it a black swan event in this case, but something you didn't expect. Maybe it was a flash crash, maybe it was long-term capital, maybe, there's 100 different things. There's, people selling mortgages, subprime mortgages to people who don't exist. Things tend to go to an excess. And when you're a hedge fund, you've been burned by all those things at some point, or at least have traders who have been, and you just learn from it and say, okay, now if I'm going to take a short position, particularly based off of valuation, then if somebody piles in, I'm at risk. And they'll build that into their framework, and you'll probably see less of it. Or they'll monitor, they'll use AI and NLP, and they'll monitor every single Discord and every single forum, and just listen. And when something happens, they'll bail out,
Right.
or bail in for that matter.
Yeah, it's interesting. JJ, what do you think? You think the hesitation from some of these guys to go short, or that's not really too much of a concern for them? Like Mark's saying, this kind of just being a one-off type of event.
I think it's probably a one-off type of event. These guys also, when they're playing with other people's money, they don't hesitate as much as you and I do.
No, you're right. But that's a different issue, JJ. As you know, they got to hit their benchmarks. Exactly. Because if you don't hit your numbers, you're gone anyways.
That's
and
true.
So the moral hazard is completely different than if it's your own money. But for those who treat it or trade their own money, you got to take it into consideration, because you're trying to do the work and trying to figure out, okay, is it because it's low float, high short, or on the flip side, can I just buy some in order to capture the VIG for the rebate? Because there's stocks that I own, and I'm getting that I think are okay, maybe not phenomenal, but I'm getting 14, 15, 20, 25%, in rebate money. And, so there's multiple ways to play it.
Yeah, definitely. Yeah, the short squeeze, I miss doing those.
Yeah.
If you ever need a guy to engineer a short squeeze, I'm your man.
I'm good, but I appreciate it.
Just for fun.
Yeah. Hey, JJ, it's funny because he always says this, Mark. It's like, like hedge funds, like the only industry you can like lose, like I forgot how you phrase it, Jay, but you can lose someone else's money, go on vacation, and then get more money
Yeah, when you come back, right?
when you come back.
And what's even better? What's even better? Like if you're a family of funds, you just close the bad ones and pretend they never happened, right? So you have a fund that lost 35%, and you have 5 others that made 6%. Yeah. The last one is just disappears. It's gone. It's gone. JJ Gorilla, right?
Exactly.
It's gone.
It's gone.
It's gone. Mark, you wrote an article surrounding this kind of events, and I like the quote from it, and I wanted to ask you a little bit more about it. You said there are inefficiencies and traditions in every marketplace that have become so ingrained by the power players that they literally think they are rules that most, if not all, participants will follow. Can you just elaborate on that?
Yeah, just what I just said earlier. I mean, you've got banks, you've got brokerages that this is the way they've always done it. And maybe, when I say that, maybe it's over the last 5, 6, 7, 8, 10 years, since, they made some changes for the financial crisis, but then you get into habits, and you just keep on doing, and you keep on going back to what works, thinking, as long as, nothing crazy happens. But because crazy can happen now, things can move so much more quickly. So people look at GME, someone interviewed me and said, well, you wouldn't pay it was at 50, I think, which gave it like a $4 billion plus 2 billion in debt. You wouldn't pay $4 billion plus the 2 billion in debt, would you? And I said, well, you know what? I'm thinking about it. And I was hoping it would fall more, and it just never came my way. And I said, let me just ask you a question, because I actually read the conference call and I read the filings. And I'm like, this company did $1.3 billion in e-commerce sales. And that was up 309% or whatever it was. Now, I'm guessing I can find a bunch of e-commerce companies out there trading for more than 4 times sales, right? 1.3 billion. Definitely, right? So if you're telling me that I can just close the retail stores, or they're not that big a drain and they add to, they're accretive in their own indirect way to e-commerce, shit, if they grow 50% next year, $50 is cheap.
Exactly.
And they're like, well, this is crazy, all these small time investors. I'm like, dude, you're the small time investor because you haven't even read the conference calls, transcripts. You haven't read the filings. You haven't read any of the documents, anything around that. So, don't laugh at the little guy because they know how to read and you're too lazy to read.
Exactly.
And so you can do the work. And when you get people communicating that stuff on a board, and it's valid and it works, it's good. And that's why you've seen GME hold up. And you got a dude, Ryan Cohen, putting in his own money, tens of millions or whatever, 13 million, I forget what it was, of his own money. What does that tell you? Yeah, it's at a lower valuation, but it's not like he's in there still working, thinking the stock's not going to go up from here. So, and that's why GME worked and maybe AMC and Bed Bath & Beyond didn't work.